Hello there guys, what is going on? Welcome to Pure Trading. In this video I'm going to show you what happened last week and I'm going to show you potentially what is going to happen next week. No, I'm going to show you what is going to happen next week exactly. So this week, what happened? 194,000 new jobs were added in the United States, and that was considered a bad number because the forecast was for 500,000 jobs. But the thing is, it didn't really move much. There was not a lot of volatility, not a lot of movement, even though that was what was on everyone's minds. Everyone's waiting for Friday for the non-farm payroll number to come out. But it was really a non-event. So why didn't the dollar weaken as much? The reasons for that is because they say that it was because of the teachers and government workers. There wasn't a lot of that sort of jobs added, and the whole coronavirus issue just tilts the whole job market in the United States. So for that reason there wasn't much movement there. But what was very important, I think, here is because I think the inflation numbers are important for the Fed. And if we look at the average hourly earnings here, it has increased. So that means there's more money in the pockets of the normal guy on the street, which means more spending, and more spending equals an increase in the inflation rate. And they are trying to get that back down to 2% there. So the whole tapering issue, which is the next thing that's important, is I think it's still going to happen. And as I said, there was no movement there. 30 pips, and that was all that there was. If we look at the area here, this is where the news comes out. It moves up and comes back down and just ends again exactly where, exactly at the same place. And that's like 30 pips. So it was a non-event for me. Even in the Dow, I'm trading the Dow, the DAX, and sometimes the FTSE as a side bet sort of a thing, a diverse portfolio. I'm trading Forex, but also Dow, DAX, and the FTSE. And even this just made me quite bored there on the Friday. No real movement. It opens over here and it closes almost at exactly the same area, so nothing happening there. And then we have next week. Now here's where the fun starts. FOMC, that is for us on Wednesday. So everyone is waiting for this. I don't want that same sort of nonsense again where we're waiting for, last week we were waiting for the non-farm payroll, and this week we're waiting for the FOMC. I want some movement there. I need some volatility. Otherwise it's very difficult to make any sort of money here. The first pair that I have on the list here is the Aussie versus the CAD. So we can see prices comes down here, have an extension beyond the mean, and this is the support level that we are we're hoping that the same thing happens here again. Also, this is really overbought situations here. Sorry, oversold on the Aussie. This is my 15-minute chart here. So if we get a manipulation here, first prices to be taken out, manipulation, and then to move all the way back up again. So that is the trade plan for me for next week on that pair. This is the Aussie versus the dollar. Now I am bullish on the dollar, don't get me wrong here, but as a small little swing trade, I would like to try and buy the Aussie just based on these guys here. The cigar traders coming in at the 78.6 level. Now cigar traders are the old guys in their in their robes and the silk robes and the cigars in the morning. So they would come in at 78.6, especially there, and then also the 127.2 levels. They would come in and really go against the grain very strongly here. and they did that, and they managed to move prices all the way up against this downtrend. So I would consider continuing that trend here. This is a trend going up here, and I would try and to continue that trend, higher highs and higher lows all the way up to 75. If it doesn't work here, if you don't see, if the trend is starting to fail, then I would not consider selling it yet. I would sell it when it gets to around about 75. Then we have the euro versus the CAD. This is the daily chart. We can see here there's nothing to the left that we can use as a guide. Where is this trend going to change? This is a downtrend, but there's nothing to the left there. There's no demand and supply zones. There's no support levels there. There's nothing on the daily. This is why we would use the weekly charts here to find out where these levels and things are. So just a little bit lower, if you check the weekly level on the euro CAD, then you could see a potential situation where prices comes down, find support based on the support level here, and then looking for a manipulation to go to the long side there. The euro versus the pound. Look, I am bearish definitely on this pair. The issue that I'm having with this is more clearly seen here on the classic chart on the 4-hourly. I am bearish this pair, but we can see the last time we had these divergences, we had our breaks of a trend line over here, and then we had moves going up, and now again we have the divergences here and a trend line, so we could expect that move up. So for that reason, even though I'm bearish on this pair, I am taking into consideration that we might be changing the direction on the euro versus the pound just in the short term though. Euro versus the yen. So these are all like the bread and butter sort of trades, the ones that we are looking for extension beyond the means plus a level, and then looking for manipulations there. So here we are. So we are looking for the extension beyond the mean. This is the bar. Extension beyond the mean, wait for prices to get to a nice little level, and then look for a manipulation on the 15-minute there. And then our cable, looking at the same situation here, I would like to trade this one short, but only once we get to a nice level plus the extension. If we look at where prices are at the moment on the daily, this is just an example of me staying out of the market until we get the condition where prices are outside of this level or outside of the envelope, and then we also have the confluence of the resistance over there, then to try and get short. Then we have another example where on the daily we don't see anything to the left here. So prices are going up, and we're trying to find another reason to go short. We can see here we've already blasted through this resistance level over here, but at that time there was no extension beyond the mean, so I was not looking for the short over there. But now prices are extended, however I can't see anything to the left there. So what do? I would go to the weekly and then find where these levels are, and we are at these levels right now. We are at potential levels to go short. In a case where you get this massive bar moving up, I would like to see on the 15-minute the highs here, these highs, to be taken out first before trying to get in short. And then we have the dollar versus the CAD here. So if we look at this pair, prices are coming down, and then here would be an example of where we try to find the long situation here, because we have an extension beyond the mean there, plus we have a level. However, that level doesn't hold. We break through that level, and the next level is this one here. So that level falls away, and the next level comes in here at this blue. So on our 15-minute chart, we're looking for prices next week, tomorrow. Today is Sunday night, so we're looking at prices to open, mess around here, accumulation, and then prices comes down, takes out the low and manipulations, and then we go off to the long side. That's what the plan is for me. Euro versus the dollar, again bearish on this pair, looking to sell. Look, the zone, the Eurozone is not in a good situation fundamentally at all. They are not going to quantitative easing is not going to easier. I think it's not enough money. They need to print much more here to solve the situation in the Eurozone. The poorer countries, they are especially now with the global market slowing down drastically, oil prices going up, and China slowing down. It's very difficult to see the Eurozone coming out. So for that reason, fundamentally, I'm looking at shorting. And then how am I going to do this technically? Technically, I'm looking at this as a trend. We don't see any extension beyond the means here. We do see prices clipping this 5-period moving average, as a trend coming down. It's better. It's always better on the Heikinashi to trade the trends. Find yourself a decent trend. We call this, when we draw a trend line, we call that a static line. When you have like moving averages, this is a 12 moving average here, this is a 36 moving average, that is a dynamic moving average. So if prices are underneath that, we are looking at still looking at things going short there. So technically we're still short. However, looking at the classic here again, the same thing. Remember, I showed you one where we actually have a divergence, and you do have that break of the divergence. In this case, we don't. We see divergences on the chart. We see one here, prices are making lows, lower lows, and you do have your divergence, but you don't get that break of your static trend line there. And another divergence here, and now we would have to see if there's a move up there. So based on, technically we can still trade this short, fundamentally also trading it short. And as I said before, I like looking at the Heikinashi and looking at a static trend line here. So prices comes up, messes around here, but gives us a manipulation, and then to go short on the euro dollar there. Yeah, we're waiting on that. I don't think that's gonna happen though. There we go. That is it. Thanks a lot for watching, guys. If you haven't already, kindly subscribe to the channel. You'll get notified whenever I post anything new. Thanks a lot, and don't forget, the most important thing is to trade safely and prosper.